2021, number 5A, September 2021. Umeshapata, question number 5A. You see, at times they can give you a very complicated transfer pricing question, but in most cases, these guys will give you a very easy transfer pricing question like this one that was set on the September 2021, question number 5A. We are told there, PM Limited operates two divisions, namely X and Y. Division X produces an intermediate product M that has no external market. The product is then transferred to Division Y, where it is used as an input in the production of product Z, N. All right? So divisional costs are as shown below. I can see variable cost of X and variable cost of Y. I can see fixed cost given there. We are told additional information, product N is transferred to Division Y at 25. Read that again. We are told product N is transferred to Division Y at what amount? 25. Assume that the production of both M and N is in batches of what here? 1,000 units. They want us to give them the profit maximizing output level for Division X at the current transfer what here? Price. So you see we have got two divisions, ladies and gentlemen. These divisions are which ones here? We have division X and who? And Y. So what basically this question is telling us, ladies and gentlemen, is that should we give division X one, should X give Y 1 unit? Automatically Y will be producing, 1 unit as well. And therefore, in this case here, they sell how many units outside there? 1. Please listen. Listen. We are told PM Limited operates two divisions, namely X and Y. Division X produces an intermediate product. Intermediate means what here? Being sold to another department within the organization here that has no external what here? Somebody? Market. So meaning that whatever X produces, it sells in this case here, these units here fully to who? Why? Because units produced by X do not have any external market. All right. And then they are telling us that the product is then transferred to Division Y, where it is used as an input in the production of what here? Product N. Now you can see the quantities sold there. Very good. I like that question. Now they want us to give them the profit maximizing output level for division what here? Somebody? X. So in this case here, profit maximizing output level for division X. So basically, give me the profit statement. For which division to start with? X. So many students after this question was set were asking Mwalimu, where did you get the quantities of X? You see, when you see, you can see quantity sold by N. Are you able to see the first one there is 1,000? So if they sold 1,000, it means they must have received how many units here from X themselves? 1,000, yes. It's 1 on 1. 1 on 1. So then when we are putting up this profit statement for X, ladies and gentlemen, we shall be able to use the quantities for both X and Y. For both X and Y. So you're copying all those quantities downwards. So we have here quantity. So we are selling this in batches of 1,000. So you cannot have 1,500. So after 1,000, we skip. We go to what here, somebody? To 2,000, because also that confused students. Next, we have 3,000, 4,000. We have 5,000. We have 6,000. There is something that you guys never spoke about. For some reasons not very well known to me. When X in this case here produces these units here, they sell them to Y at what amount? Have they given us the transfer price? At 25. So the TP is 25 per unit. So then come and give me, in this case here, a title here, where you basically give me the selling price. Give me the selling price. Selling price by who? By X. The selling price by X is fixed. It is a transfer fees of 25. So in this case here, the transfer fees, I will take 25 across regardless because it's per unit like that. 25 per unit like that. So remember, they told us in some note here, Note number one, additional information. Product N is transferred to division Y at how much here, somebody? At 25. Have these ninjas given me the variable cost for X? Variable cost for X ni ngapi, somebody? Oi, leo wanafunzi wa online hata waongei. Wanafunzi wa online hawaongei. 13, isn't it? So once you see, my good students, when you see selling price vis-a-vis variable cost, what comes to your mind? Nothing. Contribution margin, isn't it? Yeah, contribution margin. And how do we get this contribution margin? It is price minus variable costs, which again will be constant, isn't it? Which will be constant. 25 minus 13 gives me 12. So this is 12 across. 12 across. 12 across. Which question are we doing, Mwalimu? Let me just write it somewhere. Yeah. So the question that we are doing is September 2021, question number 5A. September. The question that we are doing, ladies and gentlemen, is September 2021, question 5A, like that. Question 5A. Now, my good students have been able to get contribution per unit. You see, contribution margin is contribution per unit. So when I see contribution per unit, and I can see the units in this case that I sold, then I can easily get what we call total what? We can easily get total contribution. Is there somebody this evening who can tell me, what do you think shall we do to be able to get the total contribution? Divide. Aya. Naomi. We multiply by, isn't it? We multiply. Don't worry. We shall overcome, isn't it? So in this case, ladies and gentlemen, to get total contribution, we are taking contribution per unit times number of units. And are you able to give me then that total contribution? Remember, already you have your X there. Already you have your X there. So total contribution, are you able to give me the figure? So according to Faith, we have in this case here X by CM. I like that. Sheila, yes. 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 So the first one will be 12,000. The second one will be 2,000, the quantity, times this 12, isn't it? 24,000. So this is giving me 24,000. The third one?
Tamaliza swali ama umeanza story hii? Unaanza story haraka haraka aje bila kumaliza question. Mnasema strategy.
All right. So sorry for the mishap. We shall overcome. We shall overcome. We shall overcome. All right. So then what have we been able to do so far? Have we been able to make a decision using kidogo tu, hii kitu haijakubali, screen haijakubali kuonekana. Great. Sasa tuko sawa. Hebu nasongesha kiti kidogo pekee bodi yangu ionekane. All right, 1 minute sasa. All right. So sorry for the hiccup. We shall overcome. So already we have the total contributions. Do you remember them? We have the total contributions. If I just repeat pretty fast here, we have here quantities. Quantity. We have here, is it 1,000? 2,000, 3,000 quantity, 4,000, 5,000, and then 6,000. We know that you're transferring these at what selling price? 25 or 24? 25. You see that's constant, right? And then for this division X, we have a variable cost of how much here, somebody? But 13, 13. 13, right? So whenever we see selling price and variable cost, we always remember the contribution margin, isn't it? And our contribution margin is selling price minus variable cost. Yeah, which gave us what here across? Which gave us across 12, 12 like that. Which in this case here gave us now what we call the total contribution. So total contribution, what do we have here? It's contribution per unit times number of units, which gave us 12,000, the first one. The second one, 24,000, the third one, 36,000, the fourth one, 48,000, 60,000, 72,000. So the highest contributing quantity is what here, somebody? Is 6,000, isn't it? The highest contributing quantity is 6,000. But you see, at times the examiner, like now this examiner, spoke of what here, profits. So how do we convert these contributions here to profits? I taught you this. I told you profit is always total contribution minus fixed cost. Are you able to see the fixed cost of this organization? Wanasema fixed cost ni ngapi? Yeah, for X, it's 50,000. Can just use this side here. Fixed cost is 50,000 across. You see, fixed cost does not fluctuate, eh? That remains the same. That remains the same. Regardless of the output, the fixed cost will be the same. Now, once I have my fixed cost, ladies and gentlemen, I will be able to deduct them from where? Total contribution, for me to get what here, somebody? Profit. So is there then somebody who can easily give me the profit to be generated? Remember, we are doing, which question are we doing? September 2021. Question number 5A. This is the question we are doing. Yeah. So how do we get profit? It is this total contribution we take away what here? Fixed cost. Which then will end up giving us what figures, ladies and gentlemen, here? Online wanafunzi siwaoni, siwasikii. Like the first one is 12,000 minus 50,000, isn't it? Which gave you guys what figure? Negative 38,000, isn't it? All right. That is the first profit. How about the second one? Abracadabra. Negative 26. Kwa nyuma anaona kweli 26, eh? Negative 26. Negative 14. Losses. Negative 2, eh? Negative 2. 10,000 lastly. 22,000. 22,000. So in this case here, which quantity is maximizing our profit? Is 6,000. So we recommend the 6,000 units here to be the profit maximizing quantity. It is the one that corresponds to the highest what here, to the highest profit. It is the one that corresponds to the highest profit. So now, are we together now, all of us? Are we together, all of us? Online guys? That is division X. That is division X. From there, you go ahead and give us, ladies and gentlemen, the profit statement now for division who? Division Y. Unfortunately, when I left out a little bit, I thought you would even finish this question. Most of you at all. So division Y, I want to see how you will be able to get started off with this division, given the information that we already have. You see, the quantities will be the same, isn't it? Quantities will be the same. I'm giving you exactly 5 minutes. Let's see what we have there. Let's see what we have there. So not unless they tell us otherwise, normally quantity-wise, it's a one-on-one relationship. Whatever X produces sells the same quantity to Y, and Y sells the same quantity to the external customers. So quantity will not fluctuate at all. Quantity will not fluctuate at all. So now we are doing division Y. So quantity will be the same. And fortunately, for this division Y, which produces N, we are able to see the net selling price. Are you able to see the selling prices? So selling price. Yeah, I hope you guys are able to see 150. 140, 130, 120, 110. And then we have what? 100. So once I see quantity, which is my X vis-a-vis price, I will very easily give you what we call revenue. How do we get revenue, my good friends? Price times X, isn't it? Price times quantity. Price times quantity. Do we have these numbers to help you? I want to help you guys. So 1,000 times 150 in terms of thousands, the first one will be 150 in terms of shillings thousands. The second one, wait here, 280 wanafunzi wa online siwaoni kabisa. Thank you so much, Harriet. 280. 280. My figures are in thousands. My figures are in thousands. 390. 390. 480. 350. 550. 600. And by the way, I've done a mistake here. Are we looking at profit statement for division Y about the whole company? Look at Roman 2. Roman 2, it should be the total company, the overall company, isn't it? You can see Roman 2, the optimal output level for the overall company. So there is nothing like division here. It's supposed to be overall company. Overall company. So this profit statement for the overall company, which has got two divisions, X and what? Y. So then could you kindly tell me something regarding the revenue for the whole company? Should I take revenue for X plus revenue for Y? For the whole company, total company. Harriet is saying yes. Harriet is saying yes. Remember, X makes units, and then you are told that it transfers all of them to who? To Y. So meaning that X is only earning an internal revenue. It doesn't sell anything outside. So revenue of X is internal, and from the perspective of the whole company, anything internal is always fake. So internal is always fake. So the revenue which will be relevant for the whole company is revenue for Y only. Which is this revenue? Yeah. Then come and give me the variable cost, which will be relevant. Variable cost that will be relevant. Give me a figure. Harriet has accepted. They are telling me that this should be 7, Should be 12, isn't it? Yeah, because they have told us that actually it would have been 20, because we should have taken 13 plus what? 7. That is what we ought to have taken. But yeah. Yes, but you see 13 is not the internal price. Internal price is 25. That one we have omitted it. Variable cost. No. Angalia hapo chini. Wamesema namna gani? The optimal output level for the overall company, given that the variable cost of X is what? It's 5. So for the whole company, it will be 5 plus who? Plus 7. What we have, X coming with, to Y. You see, X came to Y at 5 boom. So now plus the 7, isn't it? So then we have 12 there. Like that. So these will be 12 throughout. And remember, this is per unit. This is for each unit. This is for each unit. So then to get, in this case, ladies and gentlemen, remember, already you have the total revenue. Isn't it? So instead of getting the contribution, I can easily go ahead and multiply this by what here, somebody? By the units, which are here. 1,000, 2,000. We have, ladies and gentlemen, here 3,000. We have 4,000. We have 5,000. We have 6,000. My figures are in thousands. Please go ahead and give me these figures. Total variable cost. Total variable costs in thousands. The first one is 12,000, right? 24,000. 36,000. 40,000. 60. 72. I don't even need a column for contributions. I don't have to do these things the same way. Once I have my total variable cost, what I simply need to do is to get my total fixed cost. Do a column here for the total fixed cost. Give me the total fixed cost. You, my great students there, are you able to give me the total fixed cost? Yeah, because fixed cost, there is no fake fixed cost. The only fake things we have are transfer fees and any transfer cost. So in this case here, ladies and gentlemen, from the eyes of the whole company, the fixed costs which are relevant to the whole firm will be 50,000 plus 70,000. In terms of shillings thousands, what do we have there? 120, isn't it? So that's 120 throughout. Then if I'm using this approach, could you kindly tell me what should I do to be able to get now the profit now? If you're using this approach, now we have the variable cost, we have the fixed cost. What do we do to get the profit? Yeah, they're telling me Mwalimu take sales revenue minus variable cost minus fixed cost. Yes. Take revenue minus variable cost minus fixed cost. 150. So 150, we take away what here, somebody? 12. And then we take away what here, somebody? 120. We get the first profit because the examiner wants us to maximize the profit. Wants us to maximize the profit. So according to Bill and according to Marion here, they are getting in this case here, profit over how much here? 18, eh? Profit here is 18. I'm being given a figure of 18, the first one. Please ensure that you're able to get now these figures. 120, eh? 120 is from where? Which 120? Very good. 120 is a fixed cost. Farid, 120 is the fixed cost. You see, we are looking at the fixed cost for the whole company, which will be the fixed cost of the division X and the fixed cost of division what here? Y. So you take 50 plus 70. That's how we got 120. And then now to get profit, we are taking the sales revenue minus the variable cost minus the fixed cost like that. The first one is 18. The second one is 136. The third one, 234. 234, 312. I'm being given a figure of 300 and what here? 12, 312, 370, 408, 408, 408. Are we together, ladies and gentlemen, up to here really? Tuko pamoja ama tuko pamoja? Than this, eh? And that is why I'm the teacher. That is why you are the student here. The student should be able to have many ways of doing these things, isn't it? I can't get 18. Somebody's not getting 18 there. 18. How do we get this 18? We are taking sales revenue, which is what here? 150 minus what here, somebody? Minus the variable cost of 12 and then minus fixed cost of 120. You see, in an exam, you can go and get variable cost total. You should be comfortable with both. Be comfortable with both. Where is the variable cost of 12 coming from? Variable cost of 12, ladies and gentlemen, we have read the number 2 requirement, the optimal output level for the overall company, given that the variable cost of X is 5. And then because we are taking it to Y, what is the variable cost of Y? 7. So 7 plus 5 gives us 12. And if that is the case, then the profit maximizing output is how many units? Still, this 48 is the maximum profit. Hii niko peke yangu. Hii ndio maximum profit. Yeah, and therefore the maximizing output will be what here, somebody? 6,000 still, isn't it? The profit maximizing output is 6,000 units. The profit maximizing output is how many units here, somebody? 6,000. So up to there, somehow, are we together really? Up to here somehow. Are we together? Online hawaongei sana. At least you have an idea. If they give us this kind of a question, how to talk about, isn't it? How to talk about. If they give us this kind of a question, how to talk about. Sasa, nilikuwa nimewapromise ile swali ya Kitchen Masters Limited. Transfer pricing. Kitchen Masters Limited. Kitchen Masters Limited. 5 plus 7 imetoka wapi? Leo kuna mashida. Angalia soma note 2. The optimal output level for the overall company, given that the variable cost of division X is what here, somebody? 5. Soma note 2. So we have variable cost from X, which is 5. And because it's the whole company, we have variable cost from Y, which is 7. 5 plus 7 is what here, somebody? 12. 12. And now with your permission, please, let's go straight away to, is it May 2019? Question number 3. May 2019, question number 3. May 2019, number 3. May 2019, question number 3. May 2019, question number 3. Once you get it, please tell me yes. May 2019, question 3. May 2019. Mshaipata tayari, eh? Yes, thank you so much. Kitchen Masters is a very special question for you guys. So Kitchen Masters Limited specializes in the manufacture and the sale of firewood oven. Each oven consists of a main unit plus what here, somebody? A set of oven fittings. The company has 2 divisions, A and B. Division A manufactures the oven, while Division B manufactures the set of what here, somebody? Oven fittings. Currently, all of Division A sales are made what here? Externally. Currently, A is selling everything externally. However, Division B sells to Division A as well as to external what here? Customers. So this question used reverse gear concept a little bit. Wakachanganya wanafunzi sana. You see, which division is supposed to be the first division here? It's B. Which is selling to who here? Somebody. Which is selling to A. Like that. They know, of course, we as students will be able to take A as the first one always, eh? Waka interchange. So, and they've told us that A is only doing what here? External sales. Oh, Godfrey is saying, Mwalimu, we have done this question. I don't have a problem with Godfrey repeating it. I don't have a problem repeating it. Let's repeat it. After all, we are revising, isn't it? Let's do it. I don't know, but we do it. We do it. Hata Godfrey nikimwambia arudie swali hapa kwa board, anaweza akashindwa. Kifanya mara ya pili atakuwa genius, ataijua sana. Tuifanye. So sasa tuende pole pole sana. Division A, current selling price ni ngapi per oven? Oh yeah, ni 450, isn't it? 450. That's Division A. And then we can see cost per oven, fittings it is receiving from Division B. At how much here, somebody? That's 75. What is it to you? It is receiving some fittings from B at 75. That is the transfer price. So transfer price, TP, is 75. Transfer price. Thank you so much. 75. Transfer, 75. Then they have given me other materials from external suppliers. We have labor. We have annual fixed overheads. We have annual production and sales what here of ovens. And then we have maximum annual demand. Yeah, that the annual production and sales of ovens in units, ladies and gentlemen, from A, we can see that annually production is what here, somebody? Production is 80,000, right? And demand is what here, somebody? 80,000. So they will be able to sell how many? They sell 80,000, isn't it? Compare demand and the supply. So they sell 80,000. So they're selling 80,000. And we know that each one is how much here, somebody? 450. What is 80,000 times 450? Can we do our figures in thousands? Let's do all our figures in thousands. 36,000. Our figures are in thousands. 36,000. Hapo ni max inatembea tu. 36,000. In terms of thousands, isn't it? 136. Aye. 3 point. Whatever answer you get, you take 80,000 times 450. Whatever answer you get, you divide by 1,000, isn't it? 36. Yeah. Whatever answer you get, you divide by 1,000. 36,000, isn't it? Thank you so much. Tuende kwa division B. Division B, we can see current external selling price is how much? Woi. Is 8, isn't it? Great. So unaandika tu hivi unasema external 80. External 80. The current price for sales to division A is 75, which agrees with our 75, isn't it? We're able to see again a confirmation that the transfer price of the product is 75. I like this. Cost per set of fittings given there. Annual fixed cost, what do we have there, somebody? 4.4. And then we have maximum production and the sale of set fittings. Maximum production in gapi, somebody? Maximum production, that gives me maximum capacity. Maximum capacity, how many? 200,000 units. Maximum capacity, 200,000 units. And then you can see the maximum annual external demand, how many? So outside there, they want 180,000, isn't it? And the maximum annual internal demand is what here, somebody? Is 80,000. So required, under the current transfer price, required, under the current transfer price, which is the transfer price of how much? 75. Under the current transfer price system, prepare a profit statement showing the P&L for each of the divisions and for Kitchen Masters Limited as a whole. So remember, currently, we are selling internally these goods at 75, and currently, read paragraph 2. Currently, all of division A sales are made what here, somebody? Externally. However, division B sells to division A as well as to external customers. Both divisions are what here, somebody? Profit centers. Very good. I love that. We have to read the required a little bit. Additional information. The transfer price charged by division B to A was negotiated some years ago between the previous divisional managers, who have now both been replaced by new younger managers. 2, head office only allows division A to purchase its fittings from what here, somebody? Division B. Although the new managers, currently, what is happening with the head office? It has given instructions that A can only purchase from what here, somebody? B. And because A can only purchase from what here, somebody? B, meaning that using the current transfer pricing system, B must supply A how many units? 80,000. 80,000. Because you see, A has to sell all that it has, in this case here, externally. And we've been told very clear that A does not have anywhere else it can fetch these fittings from other than who, somebody? From B. So then when I'm doing my analysis, I know from the current transfer price, B will do 2 types of sellings here. It will sell, in this case here, internally first, and internally we must maximize. So internally we sell how many? And because the capacity is 200, we sell externally how many? We sell 120,000. Fortunately, remember, they're given as the maximum demand of these fittings from B. 180. So still, this 120 outside there will be a drop in the ocean. The demand is even higher, isn't it? So I'm not afraid. I'm aware that I will be able to sell this 120 outside there. Up to here, ladies and gentlemen, especially the online ninjas, are you able to follow really? Up to here, are they able to follow? Great. Thank you so much. So please do me a favor. Just go ahead and give me the sales revenues. So internally, we are selling this for 75. Externally, we are selling, in this case here, B. Externally, these fittings, we have a price. 450 uongo. 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 Remember this is division B, isn't it? Division B, you can see it has got its selling prices there. Current external selling price is 80. So in terms of thousands, are you able to give me this figure so that when we go to our table, we'll not struggle at all? In terms of thousands, whatever you get of your multiply, you divide by 1,000. The first one is 6,000, eh? How about this other one here? 9,600. 9,600. Is that okay? 9,600. And they are assuring Mwalimu that up to here they are comfortable. Now, for the two divisions, if I'm the one doing this, I will go ahead and get the external variable costs. For the two divisions, prayer break, leo ni waste time, lakini now prayers, hatuwezi kosa kusikiza prayers. Otherwise, itakuwa na problem mingi sana, eh? But dakika chache sana leo. Only 5 minutes. Dakika chache sana leo. Only 5 minutes prayers. At least 5 minutes prayers. Dakika chache sana. All right. Are we back? Are we back? Are we back? We continue now. Are they back? We get to continue. Yes. Yes. So then let's look at recording. It's recording. So let's look at straight away especially, I will not have a problem with fixed cost. That's quite easy to map out on my table, but I'll have problems in this case here to do with variable costs. So give me variable cost in this case here for these two divisions. So I know these figures already, you have them. Yeah. So come here and give me screen not clear. We shall overcome. I will try to make it clear. So give me variable costs of B. Are you able to see the variable cost of B? Look at the information for B. I can see materials. So material cost. So I will take what times what if you are following. Yeah, it's 5 times the capacity, isn't it? So 5 times 200,000. Because you see variable cost, it doesn't matter whether you're producing them for internal market or the external market. So in terms of thousand, this gave you guys what figure? 1,000. Do we have other variable costs? Labor, isn't it? So we have labor. So labor cost, I should take what times what here? 15 times the 200,000. Ambao mulipata ngapi somebody? 3,000. 3,000. In terms of thousands, right? Thank you so much. Do we have any other variable cost really? No. So we are through with the variable cost of B. We go to the variable cost of A. Unaweza ama uwezi? Unaweza Wanasema wanaweza. Variable cost of A. Of course, I know I have the internal transfer which will be coming later, isn't it? Already I even have the figure. So variable cost of A. So we have here variable cost of A. So variable cost of A, ladies and gentlemen, I'm able to see cost per open fittings from division B. That is transfer cost. That I already have a figure, I don't need it. We have other materials. So basically call these material cost. Material cost for A. So material cost for A, I should take what times what here, somebody? 200 times 80. You know we are producing 80,000. So 200 times 80,000. That gave you ninjas what figure? Thank you, Salma. 16,000. Haya, tuko na gani tena ingine? Tuko na labor cost. So labor cost, I should take what times what here, somebody? 45 times 80. Which gave you guys what figure? 3600. Thank you, Rahab. Nikishafika hivyo, sasa ni kuchora zile profit statements directly. We have everything now. Now we have everything. And with your permission, I'll be able to rub this so that I can write the profit statements for the divisions and for the whole company. Now we have everything really. Sasa tuko na kila kitu. Sasa tuko na kila kitu. Kuja hapo, utupatie profit statements. Wewe ni kujaza tu. Sasa ni kumap out tu. Wewe ni kumap out fixed cost, leta fixed cost kwa workings. Hiyo ndio rahisi sana. So nasema profit statements. Do they want for the whole company or just for the divisions? Under the current transfer price system, prepare profit statement showing the profit for each division and for the company, yes. So we start here with division who? B. And then A. And then you call it total company. I'm an overall company. I'm a whole company. All right. So we start here with internal revenue. internal revenue. Remember, B is the one that is getting some internal revenue. How much do we have there for the internal revenue? 6,000. Already mko na figures, ladies and gentlemen. 6,000 here, isn't it? Hapa gotire, hapa ni not apply, because anything internal is fake. Anything internal is fake. Not applicable. Then we have external revenue. We did these figures, kuziweka tu. External revenue already tuko nayo. Ini 3,600. 9,600. EJ 36,000. Si kama ni external, si ziko na figure kwa whole company. So unaongeza tu 55. 45,600. Thank you so much. Aya. You go straight away to costs. So costs, don't forget the transfer, please. Don't forget the transfer fee. How much the transfer cost? Very good. I will simply pick this internal. What B is calling an internal revenue is a cost to A. 6,000. Upper dash, upper peer dash, ama not applicable, whichever. Not applicable. And then now we have the other variable. Do you remember the variable cost we computed? Yeah. The first one was what here, somebody? Ilikuwa material. Unaweza kuziandika direct, ushazi compute pale, isn't it? So material cost, are you able to see B is how much? 1,000 here. Hapa ni ngapi? 15,000. 16,000. Hapa inakuwa 17,000. That's material. And then we have labor costs, isn't it? Labor cost. What do we have there? 3,000. 3,600. Giving us what figures? 6,600. Nilikwambia fixed cost, hakuna haja kuandika fixed cost pale sana. Kuja andika fixed cost hapa direct. So fixed cost. In thousands. Fixed cost ya B ni ngapi? 7440. Uongo. Hapo chini 4,400. Ya A ni ngapi? 7440. Giving us a total of 11,840. Is there any cost you guys think we have missed out, last born? Uko sure tumeshika zote? Imagine iko. Tumeshika cost zote. Very good. So give me the net profits. So net profit, so like that. Oui. So you take, if it's B, 6,000 plus 9,600 minus this, minus this, minus this. Give me a number I write down. 7,200. $29.60. Giving us how much they are? 10,160 for the total company, isn't it? 10,160, like that. So mpaka hapo tuko sawa kweli? Ama international disaster? Tuko sawa sawa. Great. At least wanafuata. Tuko sawa sawa. So tuende kwa part 2 sasa. Tuende kwa Roman 2 sasa. Tuende kwa Roman 2 sasa. So Roman 2 is quite similar to what we did in the other class. And in the other class I was wrong. You guys were right. Yeah. And that is why you are my sons and daughters in this academia world. Unajua ukiona wewe ni mwerevu kushinda mtoto wako, ujue yuko shida. Mtoto wako anafaa kuwa mwerevu whatever your 3-year-old kid is able to sing Batu, akiamua kuimba wimbo ya kizungu, hata uwesikia anasema ni yeah, inafaa kuwa namna hiyo. So nyinyi mko werevu kunishinda, mimi sina wasiwasi, I'm happy. Yeah. Last time we had done a couple of lessons from 6 in the morning. I think you were tired. So let's repeat this concept very well now using this question. And then we shall be able to repeat the other question. And then we shall be able to learn even more. That is the essence of these sessions here. So Roman 2, what have they told us? Part B, I mean. Head office is considering changing the transfer price policy to ensure maximization of the company's profits without demotivating either of the divisional Watiama managers. Division A will be given autonomy to procure from external suppliers, and Division B to supply external customers in priority to supplying Division A. Evaluate the maximum profit that will be earned by Kitchen Masters Limited if transfer pricing is what here optimized. Let's read note number 2. Head office only allows Division A to purchase its fittings from who? Although the new manager of Division A believes that he could obtain fittings of the same quality and appearance for 65% if he's given the autonomy to purchase from outside what year? Remember, currently, he's getting them from B, those fittings at how much? 75. But he's saying that, hey, I have somebody who can give me the same quality, same appearance, everything from outside there for how much? 65. Then what is going to happen? Yeah, let's redraw this diagram. This is a very easy concept, really. Very, very easy concept. Very easy concept here. So remember, we still have our division B. We still have our division what here? Somebody? A. Now, please, we always work with capacity. Here is kutushinda, always. Capacity. What was the capacity for B? Maximum. 200,000. 200,000. So let's do a capacity analysis. We have external demand. External demand ni ngapi somebody? Maximum external demand. Wait, tuko tumechora. Ilikuwa 180 and 180, eh? Yeah. So in this case here, 180 and 80. So external demand from outside there is what here, somebody? 180,000. And then internally, what do we have there, somebody? 80,000. 80,000. And then now we look at A. A in this case here, it needs A, total need. In terms of fittings, ningapi somebody? Oh yeah. Inahitaji ngapi zote? That is A, 80,000. Now this time round, it has got two sources. Inaweza ikatoa either internally at how much? It can pull this from here at 75. Ama itoe wapi? Externally at what price? 65 per unit, eh? Per set, yes, per unit, yeah. Same. Kwanza mpaka hapo tuko pamoja. Yeah. Yep. Thank you so much. Now, ladies and gentlemen, let's look at this gentleman called B. Always make decisions from B's side. Always. That's the mistake I did. Always make decisions from B's argument. How will B behave here? So remember, B has got two options regarding the fittings they are producing. They can sell externally at how much here, somebody? At how much? Oh yeah, externally are being ngapi? At 8, isn't it? Or in this case here, they sell internally at how much here, somebody? 75. Ngoja kwanza kidogo. 75. That's what we are told, isn't it? Very good. 75. That's what we are told. Lakini sasa A anakuja anamwambia mazee, hapana. Mimi nimepata mtu anaweza kuniuzia kutoka nje ngapi? I can only work with you if you will be able to deliver these things to me at what price? 65. And because A or rather B would want in this case here to always maximize what here? Their capacity. A, B would want to maximize this one here. You look at the capacity of B. B would want to maximize its capacity. So for it to maximize its capacity and maximize its profits, what do you think will be the best interest for B? First of all, they sell 180 outside there. So decisions made by B. Decisions made by B to utilize its full capacity. And I like to, some students were telling me, Mwalimu, utilize full capacity B of the first division here. So in this case, it's lucrative for them to sell externally at 80. If they had enough market, they would have sold everything at 80, isn't it? But remember, their market is restricted, isn't it? So sell externally, how many? 180,000, isn't it? At what price? 80. But you see, we don't want to be idle. If we sell externally 180, what is our space still? We have a space of 20 remaining, isn't it? So what do we do with this 20? No. Remember, now we are changing this narrative. Don't remember even what I taught you last time. Remember, we want to produce 200,000 as per what here somebody, our capacity. So we are selling in this case here 180,000 externally at 80, isn't it? And since we don't want to be idle, what do? We sell internally. But now at their price, we sell internally how many to make it 200,000? We sell 20,000, isn't it? At what price? 65, yes. Because already somebody else has set a base. He has said my base is 65. So in this case here, they become like the other what here supplier. This is the approach I would want us to now be using. We must work at full capacity, the first division, always. Full capacity of the first division. So then are you able to give me these answers first of all? Yeah, I repeat, yeah. So in this case, you sell externally, mnasema in thousands, 14,400. Yeah, I'm repeating here, 14,400, B, 1,300. So allow me to repeat, ladies and gentlemen, here. Allow me to repeat pretty fast. So you see from the question, we know the capacity, this first division, known as what here somebody, 200,000. You and I know for sure that we are always better off selling these goods where? Outside. Because when we sell outside, either way, whether you're talking about 75, 65, when we sell outside, we sell at a higher price of what here somebody? 80. So we'd want to sell outside as maximum as possible. And in this case here, the maximum external demand is what here? Is 180. So then first, decisions of B. Decisions of B. So decisions of B, what do we have here, ladies and gentlemen? We sell externally maximum. Sell maximum externally here. Yeah. So it will be 180,000 and the external price is 80. Which somebody has given me what figure? 14,400. But you see, we don't want to be idle as B. Because we must always work with maximum water kappa, meaning that we still have to negotiate with A. We tell A, tusipokupatia hizi extra, tutakuwa idle. Na tukiwa idle ni mbaya. So we'll be able to still produce some. To fill the capacity to 200,000, we produce how many here, somebody? 20,000. And then this one we sell where? We sell internally, isn't it? And internally, ukimsukumia 75 atakwambia mazee hapana, I want to minimize my cost. Utamsukumia because unamsukumia with the price which he had gotten an offer from outside there, which was what here, somebody? 65, which gave us what figure, somebody here? 1,300. 1,300. Now, please listen. The revenue for A is not changing. Revenue for A, regardless of where we are getting our fittings from, our sales, you know that we are going to sell 80,000 at what year? Was it for 50? Which gave us what figure, somebody here? Which gave us 36,000, isn't it? Which gave us 36,000 like that. So A atuguzi. A itabaki bado 80,000 times the 450, which gave us 36,000. Aya. Kwa hii table tu, hebu nifanyie zile material cost. Unafikiri za change? Material cost ita change kweli? The external cost. Haita change. Haita change because itakuwa ni 5 times 200. alikuwa 8 years. Yes. Outsource the 60 years. Shall outsource the 60 at 65. And we shall be able to account for that when we do that table now. Good question there. Yeah. Apart from transfer cost, every other thing will remain the same. Kwa hivyo sasa tunakuja hapa tuandike profit statements. Imeisha hivyo. Imeisha hivyo. So profit statements. So we have here B, we have A, we have total company or whole company. Let's start with internal revenue. So internal revenue for B, how much? Remember we sold 20,000 internally. We sold 20,000 units internally. 1,300, isn't it? Please, hapa Gotire, Asha, not applicable. Hivyo lugha ujui. Hiyo lugha ni mzuri. Hiyo lugha ni mzuri sana. Aya. Twende kwa external revenue. External revenue. External revenue. Sorry. External revenue. External revenue from B, how much? 14,400. Ya A ilikuwa ngapi external revenue? 36,000. Giving us how much here? 5,400. 5,400. Thank you so much. Thank you so much. Alafu unakuja unaandika costs. Cost ni gani? Unakumbuka usikasahau transfer. Transfer price. Ama uite transfer cost. Ndio ulete tu hii hapa direct 1,300. Na hapo unajua ni dash not applicable. Hapo iko sawa. All right. Right. That is a transfer cost. Any other item? Material cost. Material cost. So material cost ni ngapi from B's perspective? 1,000? 1,000. 16,000. Giving us what here, somebody? 17,000. Okay. Then we have labor cost. 3,000. 3,000 here. 36. 90. 30,000. 3,600. 3,600. Giving us what amount? 6,600. Now, before I go to fixed cost, is there anybody who is able to remember outsourced fittings? Yes, not many can remember this. Outsourced fittings. Remember B never got all the fittings from, not B, but A. Never got all the fittings from B. It got some fittings from outside. Outsourced fittings. Outsourced fittings. So outsourced fittings will not apply to B, isn't it? Remember A, they outsourced how many of you are following? 60,000. And they were getting this from this ninja at how much here, somebody? 65. Remember our figures are in thousands, eh? 900. 3,900. Hebu kujeni hapa mniambie sasa ati mwalimu kwa sababu iko na dash hapa at sasa hapa not applicable, and yet this money is being paid to somebody who is outside the group. This money is applicable here, isn't it? It's applicable there. It's applicable there. It is now after doing that you shall be able to come and do what here? Account for fixed cost. And I normally tell my students, I'll tell you something. I'll tell you a story. Fixed costs. So fixed cost ya kwanza bili kwa ngapi? 4,400. Ya pili 7,440. Namna hii. Hapa inakuja ngapi somebody? 11 11,840, isn't it? Weka namna hii, namna hii, namna hii, namna hii, namna hii, namna hii. Namna hii, namna hii, namna hii, namna hii. So I want to tell you something, ladies and gentlemen. I've taught this question, this paper for quite some time, and I know one thing. Normally for transfer pricing, the second part is normally not very, very easy. The second part A inakuwa rahisi. The second part is not very, very straightforward. So what I normally tell my students, if you go to part 2, and then you hear the examiner said, we only have how many minutes remaining? 5. 10 ni mingi sana, inaweza ukasoma soma. 5 minutes remaining. As a genius of a student, na ujaanza kufanya part 2 of this question. Haujaanza kufanya part 2 of this question. What do you do? Sio fix peke yake, una copy everything the way it was in table 1. Kama material hizi utapata marks yo, and you see how we mark, we'll come and say any tick, any 5 at 2. So kama umepata hizi, utashangaa sana unapita MA. Ama any 5 at what? Utapata hizi, unaona kama fixed cost hizi, utapata mingi sana. Hiyo ni sawa eh? Katikati hapa sikushtua kwanza kufanya swali ya transfer pricing. No. Isikushtua kwanza kufanya swali ya transfer pricing. Isikushtue at all. And I hope I've shared with you a marking scheme ya AMA. Umeona, we are not very precise. We are not looking at a student who has gotten at every. No. No, the performer. Lift and shift, yes. Lift and shift. Very good. Very good. Part C, hiyo ni yenu, sina interest nayo sana kwa hii mtihani nakuja. Sina haja nayo sana hiyo. November 2018, question number 4B. November 2018, question number 4B. Yeah, Chepchumba nitafanya yoyote, lakini sasa wacha mimi nifanye ile kwanza mimi nataka kufanya. Wewe nitafanya zingine baadaye. Nitafanya zingine baadaye. Sasa wacha nifanye ile mimi nataka kufanya sasa. Utanishukuru baadaye. So remember, we have a class tomorrow at what time? Daytime? Now we are back. What time tomorrow? Simeanza leave. Nilienda hizi class a day, wanafunzi wakanipiga simu wakaniambia mwalimu you are unfair. Patie time. Tutaanza sijui leave siku gani. Sasa ameanza ama mjaanza? Amjaanza bado. Aya. Sasa mtaanza leave wakati gani? Monday. Hii semester mmechelewa kuchukua leave. Last semester mlichukua leave mapema sana. Hii semester mmechelewa sana. Kwa nini? Next Monday. Ebu bila jokes acha tuone. Aprils are good eh? Washaanza eh? So wangapi wale kusema ukweli kabisa wameanza leave hapa? Wangapi wameanza leave? 1 2 3 4. 5. Okay. I even know. Brother Just. Great. Wa online wangapi wameanza leave? So one admin. Nataka wale ambao wameanza leave wasema tu me or why yes. I'll follow from job. Yes. Kumbe yes ni wengi. Ya karibu sana. Yes ni wengi. Aya. Because kama kesho, I'm now solving the mock questions I gave you. Have you attempted all the mock questions? Jamaliza bado. We shall overcome. Now, ladies and gentlemen, 2 p.m. Because AFR is always at 1, isn't it? So AFR 1 to 2. And then AMA 2, eh? Wamekataa. AFR what time? Ufanye AFR 1 ama AFR iende. Ama tupange kitu na kwa WhatsApp group. Fanya kwa WhatsApp group. We shall overcome. Now, ladies and gentlemen, these questions are done it in the normal class. And I would want to urge all of you to repeat it at your own time. Ukweli ama uongo? Nilikuwa nimefanya November 2018. November 2018. November 2018. Hebu confirm haraka haraka. Tulikuwa nimefanya ama hatujaifanya hiyo? Hatujaifanya eh? November 2018 question. So it's about life cycle costing, right? It's about life cycle costing. Remember, a project or a product's life cycle goes like that. Yeah, we normally have the stage we call research and what? Development. Then we have path or entry to the market. Then we have what we call growth. Then we have in this case here what we call maturity. Then we have in this case here what we call decline. And then of course death like that. Please anchore kitu haraka haraka. That in life cycle cost, you must always follow this diagram and account for all the costs. Okay, so Joanna Beach and the university students are also saying, me. We shall overcome. Kiprop, hata wenye amuko job, kila mtu ako job hapa, I suppose. That's why you guys are in the evening, isn't it? Wale wana kazi wanakuanga mchana peke yake tu. So we have what we call research and development phase. We have entry to the market. Then we have growth, isn't it? Growth. Oh, Maggie anasema wako hapa hawana job eh? Aya. Nasi unafaa kuingia klasi ya mchana. Naingia klasi ya mchana. Unapumzika mapema. In research and development phase. And then we have entry to the market. And then we have the growth phase, isn't it? Mimi hata off wameninyima woye. Maturity. We shall overcome, yeah. We shall overcome, yeah. And I've also seen some employers who believe this thing is real when they get letters from the school. Eh? If you think our letter can help you, please talk to us. Talk to us tukuandikie barua. Na pia kuna wale employers ambao wana believe na barua ya daktari eh? Lakini usidanganye, utakuwa muongo sana hiyo, isn't it? Decline. We shall overcome. So death, okay. So Daniel, you can talk to me later. Eh? Talk to me later. Nikiandikie barua niseme mpaka exam dates zako eh? Na request nimwambie tafadhali waachilie mwanafunzi wangu apite mtihani aweze kuserve you as an employer even much better. Right. Thank you so much. We shall overcome. So you see here we are told AZK Limited, a manufacturing company, is planning to launch a new model whose life cycle is 3 years. So you can see 2018 is when we're starting, 2018 December, 31st December 2019, 31st December 2020. The marketing director believes that the customers could only pay 120 per unit, but the finance director believes this will not cover all projected costs throughout the product life cycle. They want us to give them the life cycle cost per what? Very easy. So nakuja hapo unafanya hii table, uko na first January 2018, uko na December 2018, uko na December again 2019, alafu December 2020. Aya, unaanza na research and development. So research and development, you can see here they were 850, 400. Is that okay? 850, 400. Here we are 200,000. Nothing there, nothing there. That's research and development. And then we have variable production cost. Variable production cost. Ngapi somebody? Woi Joseph, watu wake Hata tuende na bunduki haiwezi kubali. You guys have very serious employers. Tell them not to take life very seriously. The board is not clear. Leo board imekuwa shida eh? Pole. Ile mashine yetu inakataa kazi. Mashine yetu inakataa kazi sana. I hope they can see it a bit better. So variable production cost how much? Mwaka wa kwanza, hii beginning, nothing, isn't it? Alafu ya December 2018, how much? Uongo. Hakuna 100, eh? Because you see, this is variable cost per you. When it's given on a per unit basis, you always multiply with the number of units produced. Because remember, life cycle costing is all about totality. Total, you can't read it for me a figure for a unit. So see, it's 100 there, fine, I agree. But you can see in December 2018, total number of units produced were 20,000. Uko chini kabisa, you're able to see the production. So you get us the total production cost. Wanasema ni ngapi sasa hapa December 2018? 2 million. Woi, online hawajaona 2 million. Adjust the board again. Oh yeah. Poleni sana, we shall overcome. 2 million, eh? Aha, 2 million. Is that okay? Because you see, it is 100 times 20,000. Hebu nipatie ni variable production cost ya mwaka ingine. 1.6 million. Sasa mmekuwa wenyeji, eh? How about ya December 2020? 1.8 million. Yes. Sema. Variable production cost. You see, they have given us variable cost per unit under production, 100. You see, that's per unit, right? And how many units do you produce? Hapo chini kabisa, production. Are you able to see 20,000? Across. Thank you so much. I had not even noticed you. Sasa nimekuona. Great. 20,000. Yeah. So tuende kwa the next one. After variable production cost, what are we able to see there? Fixed cost. Sasa hapo utasikia mwanafunzi anasema tena achukua hiyo fixed at production cost apply na nini? Number of you, and yet they have given us total. They have given us total. Fixed production cost mbesha shiga na 500,000 across, right? Great, examiner. I'm so sure the online students are straining to see my board, but are they able to follow somehow? Are they able to follow somehow? Oh, yeah. Thank you so much. Somehow, please. Somehow, please. And then we have the marketing, variable marketing. Variable marketing. Hebu tuone maajabu ya Musa. Ukistaajabu ya nani? Variable marketing. Wacha tuone maajabu. Ya kwanza to 40,000. Yes. Because they have given us variable per unit. They have given us variable per unit. So ya kwanza of course ni dash, ya pili je? 240, wanafunzi online wajaongea bado. So 240,000. Next. 160,000. Next. 200,000. I will not move until the online students have confirmed that they're able to see these figures. I will not move to any. They're able to see them, eh? Thank you so much, Saumu. Thank you so much, everybody. Thank you. Very good. So after that, we have total what here, somebody? So that is, that is fixed marketing cost. There's kuna fixed cost mingi, eh? So fixed marketing cost. Unaandika namna hiyo. Fixed marketing cost. Fixed marketing. So fixed marketing dash there. The fixed marketing we can see 200. Na pia kuna wanafunzi ambao wamezoea vitu mbaya, wanapingana na examiner. And now fixed cost cannot be different years. Kama examiner ameandika hivyo, si uandike tu 200, 150 and what here somebody? 100,000, yes. Ni examiner ametuandikia hivyo. Yeah. So that is given to us. 200,000 and 100,000. 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 200,000 and 100,000 Then, ladies and gentlemen, we have the very last one, which is what here, somebody? Fixed distribution. That is the very last one. Hapana, kuna ingine. So fixed distribution, what do we have there? Under fixed distribution, 120, eh? Under fixed distribution, so that's there. Next one is 120,000. Constant, we are lucky. Alafu ya mwisho ni namna gani? 120 pia. The very last expenditure there is known as what here? Disposal cost. Dash. Disposal cost inakuja ngapi? 300,000. Is it a cost or a revenue? Is it a cost or a revenue? Na sasa kama ni revenue, itafanya nini kwa life cycle costing? Aya. Kumbuka life cycle costing ni death cost, eh? When we are disposing, yeah. That's a cost. Is that sitting? So many guys were putting this figure in, bruh, and it's a revenue. All these figures are costs. It's a disposal cost. Tunafika mwisho nayo, tuna dispose. Sasa kuja ni mu-add costs zote. Patia totals. Add costs zote. Uweze kupatia totals. Total costs. Kwa kila life cycle stage, are you able to give us the total cost? Hivi tunafanya za mwisho kwa mzuri, zinasaidia. Haya. Alafu hata kwa ujakuwa ukisoma, wewe fuata tu. Fuata. Sitakusaidia. Ya kwanza naambiwa ni ngapi? 850. Ya pili 3260. 3260 K. Allow me to use the word K for 1,000. 2530 K. Ya mwisho kabisa 3020. Naomba mnisikize sana. Kama wangetupatia discounting factors. Are you able to see the discounting factors down there? Hii swali tunge add everything, tuseme the total life cycle cost. Ingekuwa that plus this. Lakini akisema anataka uanguke. Amekupatia discounting what ya factors. Huko chini amesema discounting factors. Are you able to see the present value? Yeah. So what do we do with them? We multiply, we discount, isn't it? We discount. Yeah, so go ahead and discount. So PVIFs, of course, we know for at the beginning it will be 1, eh? At the beginning it will be 1, 0.89. Hapa tuko na 0.80. Hapa tuko na 0.71. So give us the discounted costs. So you're multiplying. So this will be 850, 400. So this times this. Nangoja wanafunzi wa online 2901. 400. Thank you. Thank you so much, Ramla. Thank you so much. So na multiply hizi. Mnasema inakuja ngapi? Somebody 2024. 24,000. And then lastly, what do we have there? 21. 44,200. Thank you so much. So the discounted cost, now we can add them up. So give me the total discounted costs. Summation. Ukiadd hata mwanafunzi mmoja wa online hakuna mwenye amepata huo ye. 79 20,000. So this is the total life cycle discounted cost. And therefore cost per unit utadivide na ngapi? Uongo. Utadivide over life cycle quantity. Over the 3 years umeproduce units ngapi wewe? Over the 3 years umeproduce 20, 60, isn't it? 60. Which gives us 100 what here somebody? 132. Siku exam ungepata hii peke yako. Sasa iko sawa eh? At least hapo Charles sasa I'm done let down. Alafu ukiangalia hapo chini kuna fala anasema kwamba transfer, ngoja, anasema kwamba selling price ikuwe ngapi hapo chini? Ati ni director. At selling price ikuwe 120, itaweza commit kweli the costs. If the cost is 132, selling price itakuwa 120. No. So in this case here for Roman 2, a selling price of 120 will lead to a very high cost gap. It is below the cost of what here, cost of 132. So the selling price of 120 should be rejected. The person saying that we should sell the 120, tunamwambia pana, tumekataa hiyo. How do we get the 60,000? Remember, year 1 we are selling 20,000, year 2 20,000, year 3 20,000. That's how we're able to get 60,000 like that. Now, ladies and gentlemen, please, when we meet in our tomorrow's class, every student, I don't know how they do this, but it's very, very important, shall have done April 2023, question number 3. April, hapana lala leo. Ama ukilala leo, usifunge macho yote mawili mpaka umalize hili swali. April 2023, question number 3B. In stock simulation. Nataka kuona argument yenu leo katika WhatsApp. Stock simulation. Yes, you can guess yes. Charles Ndambuki, that is it. Part 2 statement, Dennis. Part 2 statement, what of this? There is somebody, in this case here, who wants us to use a selling price of 120. Let me just go through. Yeah, comment on the target price by the marketing director and suggest ways of reducing any cost gap. Okay. So you see, ladies and gentlemen, the marketing director, we are told, believes that customers could only pay what here? 120 per unit. But the finance director believes this will not cover all projected what here costs. And our projected costs are how much here, somebody? 132. So for sure, there is no way this selling price of 120 will be able to cover a cost of 132. So you're going to have a huge cost gap. And remember here, you can't compute cost gap. Eh? Is there somebody who is able to remember the formula of cost gap? How do we get cost gap? Yeah, you can talk of estimated cost, isn't it? Yeah, estimated cost minus, in this case here, target what here? And how do we get target cost? We must be given a selling price minus a profit margin, isn't it? You see, we're given a selling price, but no margin, eh? Yeah, we don't have any margin. I have to put a 10% margin. But the estimated cost is very high. It is 100 what here, somebody. So regardless of what this of course is even going to reduce, because this is a selling price. When I deduct my margin, it could even go to 110. So we are going to have a big cost gap. Yeah. Because in this case here, the selling price that we have is much lower than the cost. Ways of reducing this cost gap, normal ways of reducing cost. How will you be able to reduce cost, ladies and gentlemen? So for example, in this case here, we can talk of cheap labor, isn't it? Yeah, bring in this case, unskilled workers. No, not unskilled. There's nobody in this world who is unskilled. We talk of semi-skilled. You bring some skilled workers and then you train them internally for the labor cost to go lower, to go down. You can also think about what alternative raw materials. You can retrain your workers for them to become more faster in production. So there are so many ways. You can, in this case here, let out some of your warehouses here to reduce on rent. The normal ways of reducing your, sourcing, you can source these materials here from cheaper suppliers. So April 2023, question number 3B, unisaidie hiyo tafadhali. Sawa. Thank you so much. See you tomorrow. Yeah, bulk purchases to enjoy discounts. Thank you very much. Thank you very much. Automation of process, I'll give you a marker on Wrath, sorry, yeah. Okay, bye-bye. Kesho ni saa ngapi? What time is best for you guys? Good night, Augustus. Bye. What time is best? So wanasema 1 p.m. na tusifanye AFR. Fanye AMA. That's what most students are saying. After all, my subject is AMA. That's my subject, yeah. That's my subject. My subject is AMA. So tomorrow, 1 p.m., Advanced Management Accounting. Bye. Wamekataa hii AFR hii, AMA ilikuwa 4. Unajua sasa hawa wanaleta shida hawa. Unaona 4. Kwa hiyo tufanye kesho 4, sawa, without fail tomorrow 4. For just 1 hour, yeah. Sababu ni theory. Mimi ni mwalimu wa theory. AFR, AMA, 1 p.m. Thank you.